Welcome to Money Discourse. Coming up, is inflation rearing its ugly head with CPI and PPI higher than expected? We talk Tesla, Airbnb, Roku, Uber, Lyft, and some other major movers. And has this market rally stalled? Rajan, what are your thoughts?
Yeah, I mean, let's put it this way. 2023 has been a good start of the year, especially if we've been bag holding some of these bad names over the past. Yeah, I mean, last year we had energy, the Dow, the S&P sort of outperforming, the Nasdaq was the dog, and it's been a reverse this year where the Nasdaq has been the one outperforming, and the Dow and the typical Dow stocks, which has been underperforming. So we've seen what we've seen this whole 6 weeks so far this year. It's pretty much that trend unraveling and doing the opposite. But now we've got to a point where after such a big rally, we're now starting to get data, which is not really supporting this rally any further. So we went up on the optimism that inflation was cooling, which it is, but we had the CPI number. So we had CPI earlier this week, which came in a headline of 6.4%, which was higher than the 6.2% estimate, but it was down 0.1% from the 6.5 that we got last year. That was the headline. The core was slightly also above consensus. So, but the thing is, if we look at the breakdown of it, food is still up over 10%, energy services, and then despite this, nat gas basically going free, right? We've seen that some of these electricity, or all of them are going so low, but yet the gas bills are still really expensive. And so, and that got shown out on the CPI, and the breakdown showed that electricity bills were up 11.9% and gas bills are up 26.7%, despite that gas being like $2.30, being at the lowest it's been in like 5 years. New vehicles were up 5.6%, and shelter, which is the biggest component, was up 7.9%. So even though it's moderating, it's still pretty high. And then when we now look to the PPI numbers, which came out on Thursday, it wasn't good. I mean, that basically showed PPI final demand for January, which was 6%, which was down from 6.2% last year, but well above the 5.4% expectations. And PPI ex food and energy was still 5.4%, which was more or less flat with last month. So that sort of big sell-off that we saw on Thursday, especially towards the end of the day. And then on top of all of that, put in last week's non-farm payroll, where we had over 500,000 job additions. And there's been many things that sort of trying to explain that away. But either way, the number was strong. The expectation was like 100,000 or something, and it came in at 500,000. So you've got the job picture, PPI, CPI, all starting to really push bond yields higher and derailing this mad ascent we've had, especially in these growth names. And so it's been, although we've had some nice movers with some of these stocks, but this is where we are right now. So if we actually look at where we stand right now in terms of the S&P 500, you can see that we got to a top. We took out the last high that we got back in November, and before we went back down to just under 3,800, we got to a high above, just over around 4,200, and now we're slowly coming off. And we've seen two closing candles that had two red candles, but the body is quite small. So we've had big wicks either side. So the volatility is there, but again, we've just starting to moderate a bit. Now the question is, do we get towards this trend line and then break it and then hit back towards here? And again, all the Fed members, a lot of these ECB members, a lot of them are all data dependent. So data is everything right now. Every data has been highly looked at. Retail sales also came in strong. UK retail sales came in strong. So despite this whole talk of recession coming, everything is pointing to anything but a recession right now. And this is what's given the power to all these central bankers to just continue doing what they're doing. And all of these guys, especially the Fed, none of them are talking about rate cuts at the end of this year, is what a lot of the market was pricing in, especially when we had this January rally. It's now, they're talking about, is it another 25 basis point hikes? But it seems to be a common consensus now we're going to be above 5% rates for the Fed. And in terms of any type of cut, it looks like it's going to be next year, unless all of a sudden things start to unravel and things happen. So this is where we stand right now. What say you?
So, Raj, we've spoken about the UK energy prices. Just looking at it right now, it's still on an energy cap where we're paying 34 pence a kilowatt hour for electricity and 10 pence a kilowatt hour for gas. However, Octopus, they've come up with this cool tracker. It's only 22 pence a kilowatt hour for electricity and 5.7 pence per kilowatt hour for gas. And now that's like a huge saving. It's like down 35% on electricity and like 43% on gas. So I'm actually really happy to see this type of tariff come out. We're seeing gas come down so much, but how's your nat gas position doing, Rajan?
Yeah, nat gas is killing me. To be honest with you, to be honest, it is the thorn in my portfolio right now. While everything else is doing relatively okay, it's nat gas. And what I've been, I'm long. I had a trade on, and for the purposes of the money discourse portfolio, I just took the full hit on it. But privately, I actually got assigned. I took assignment of it, and I'm selling calls against it, and I'm just keep on selling calls to try to bring down my average. But I'm looking at where nat gas is now, and it's $2.30. And again, the real risk is obviously when you buy an ETF on a commodity, you have the roll cost, and that's the natural drag that pushed the market lower. But I mean, let's face it, it's been a warm winter. It's been this is the first time I can remember, or especially since I moved here, that we haven't got any snow that's settled. Like no snow at all this year. Like the ski resorts, the snow plowers. I mean, it's snowed in Florida apparently. It's snowed in Texas, but it hasn't snowed in New Jersey to a point where it's actually stuck on the ground, and it's just nuts. And so next week we're supposed to see some snow flurries, but again, the temperatures in mid 40s, high 40s the day after. So whatever there is, it's just going to melt. So it's not a good position. But to be honest, I look at it. It's like when everything falls, sometimes it gets to such an extreme level. I mean, what's nat gas really going to do? It's going to become free. It's $2.30 right now, a therm. And in Europe, bear in mind that the European nat gas future, which TTF was above 300 at one point, it's at $50. And then even the UK one, everything. But the biggest thing is, I wouldn't even mind. I actually would encourage it to go lower. I don't care if I lose money on my position. I'll make it back in my heating bills. But that hasn't translated yet.
Yeah.
Like I'm still paying about 16% more than I was last year. So that's the most frustrating part of it. Like if my gas bill, if my heating bill went down 25%, yeah, I'll take losses all day long. I wouldn't care. But so yeah, that's been a one thorn in my side. But I'm still just rolling down calls, and I've got my average down by about 25% by selling these calls against it as it keeps on going down. So all it needs is one decent pop, and I'll be able to get out break even. So that's my plan for that trade. But we're talking about other things though. I mean, we've got the move in Tesla, which has been great. That's been 100% up from the low. I mean, you've got Nvidia that's going on. Yeah, it's been wild. It's been wild. We've had some good moves in Airbnb. That's been a great move for the company as well. We'll talk about that a bit later. What did you see on your end?
Yeah, I mean, like if you look at Cathy Wood's tweet saying that the most brutal interest rate increases in history are nearer end, and growth stocks in general are looking to make up for lost time. These growth stocks have been absolutely battered, but this year they're on an absolute tear. Which ones have stood out to you the most?
You've seen the market reward companies that are definitely showing signs of they're making some money, and I think in general everything has risen, even if it's a pile of shit or not. It's risen because growth stocks are generally categorized as one basket, and it just goes up. And despite the fundamentals or whatever, it's gone up because so much has been smashed up from before. But the ones that will sustain this rally, or at least not have the same type of drop, are the ones that are showing more fundamental behaviors that could sustain the rally. And so like Airbnb was one that really stuck out to me. So they actually reported their first net profit that they've done so far in their history, and Uber as well. They have showed a lot of promise as well. But whereas Lyft, on the other hand, it was a bit of a disaster. But if we look at Airbnb and we look at their quarterly report, and this was the one, right? So if you look at it for Q4, they had a net income of $319 million, and that coincided with a full year net profit of 1.9 billion. Which has marked the most profitable year that they've ever had. And bear in mind, they've been taking losses. So Airbnb is one of those growth names that is now churning out some serious amount of profit. And regardless of what's happening, their business model seems to be working. There's a lot of stay-at-home staycations, and it's really putting Airbnb in a good light. Their free cash flow is wild. It's up 21% year on year, and their full year free cash flow is up to 3.4 billion, which is a 50% increase year on year. And when you look on year on 3 years, is up over 3,000%. So I mean, their gross booking values are going up, like they're growing at a real exponential rate, especially on a year-on-year basis. So and if you look at their guidance for next quarter as well, it was also very, very strong. So I mean, I like Airbnb. Airbnb was about $90 at one point. Actually, yes, I've got my chat GPT over here. So so Airbnb actually reached $83 at the end of December, and it closed at 131 yesterday. But it had actually got to a high of 143. So that's almost a double up on Airbnb. So that was a good one. And we had Uber as well. They had good results. And but meanwhile, Lyft, they reported a huge loss, and they went down 30%. So Lyft has got pricing issues. They haven't rose the price fast enough, and that's been their problem. We had Roblox as well. That was up 13%. They reported actually decent EPS beat and revenue, but what it was is their bookings was in line with investments, but their daily active users have grown 19% year on year, which is just under 60 million now. And so, and then you see that January DAUs was 65 million. I know your daughter's probably contributed to that, right? So it's just wild. It's so you're seeing a lot of these people make good numbers. Upstart, which has been a dog, they had not bad results, but they did guide well short for Q1. Their Q1 revenue was forecast at 100 million, which is well short of the 140 million, but the stock went up about 30%. So I feel like the type of action you're getting is you've got some of these names are so heavily shorted, and I think if some of these earnings were just not bad, right, and the momentum just grew, it just was a cascading event, and you just ended up having these huge up days, like 25-30%, and so it was a bit wild. But yeah, I mean, I think Airbnb was a standout for me out of all the earnings that we saw so far, and so I had a position in Airbnb from before, sort of averaged in as it got lower, and so now where it is, again, story of my portfolio has got back to about the level, So I'm hoping now we see a bit more of a sustained rally coming towards the end of the year, and then get out. That's my aim. Get out. But my whole aim is just to get out. Get lighten the load. So what's your take on Tesla? Obviously, it's had a big move up. They talked about how the Model Y sold out for January. What's your take? What are you seeing from your side?
Yeah, so I mean, it seems like all the fears that we had in November and December created by the mainstream media, it seems like none of those have really panned out. The demand issues are all but kind of gone, obviously with price decreases, but that was kind of what was priced in anyway into the stock as it was falling, and going bankrupt and Elon having to sell more. One of the main things that I want to kind of highlight is, you get people like Charlie Munger, who came on CNBC saying that he would prefer to invest in BYD over Tesla, saying that BYD is so far ahead. But you can't actually listen to his words. You have to actually look at what they're actually doing. And what they're doing is that he's actually offloading his BYD position. So follow the actions, not the words. It's literally chalk and cheese when you look at how Tesla sells less cars but makes 8 times more profit per car. I'm really happy with the Tesla move, just so I don't feel so stressed out now. Before it seemed like, especially the last quarter, it just seemed like every day was a drop, and when was it going to end? It's just like a called up spring. It came back.
The momentum is incredible.
Yeah, you look at the amount of volume that Tesla is generating. I mean, the market makers must absolutely love it. Taking a bit here and there. They love this stock. Just
the liquidity, like I was mentioning to you earlier, the liquidity is incredible. You can trade any size you want, and it will just be eaten up alive. It's doing over 200 million shares of volume. It's more actively traded in terms of notional than the S&P contract, the SPYs. The option contracts trade like liquid water. It's just, you can put on any strategy, multi-leg strategies, and you can get filled at midpoint. It's absolutely incredible. I've been working on doing quite a few like Tesla, trying to do low risk strategies, but like multiple legs, like broken iron condors, broken flies, double reverse flies, just trying them out, and it's just you get filled at midpoint, despite what the spread shows you. you get filled at midpoint. It's just incredible the amount of volume. So in terms of as a trading vehicle, it's one of the best things out there. In terms of long-term thesis where it goes, well, that's another type of trading. But if you just like to trade and you want to be in and out with size, it's just like a perfect trade right now. It just captures the imagination. And then talking about Tesla, yesterday after the close, there was rumors that Sigma Lithium was going to put itself up for sale, and that Tesla could be one of the potential companies to make an acquisition for them. And there's Sigma Lithium was up 25% after hours.
The cost of raw lithium in the cars used to be a couple of $100, and now it's like in the thousands. I think it was like $300 to $3,000. So yeah, it's making a dent, and especially if they want to make this lower cost model, they're gonna have to do something to bring that cost down, because it seems like everything else is coming down in cost. For the world to go to sustainable energy, we need stationary storage, and that needs you need to get the lithium to come down as much as possible.
But let's talk about Google. Now we and in the battle of the wars when it comes to robots and chat. So right now, I'm lucky enough to actually have ChatGPT integrated into the Bing browser, and it's a great thing where you can just search for anything, and whoever's seen it, and then if you've got any questions, you can just then basically click the chat and then ask it question: what is their stock price, Airbnb investor relations, Airbnb profitability of the last year, and it just answers it like a question. And it's the new way. And then you can do, how does it compare to its competitors? And then it just responds. It's just the integration, and I think it's great. And for me, I've been a Chrome user for such a long time, but I mean, this is just something that's keeping me on Bing right now, just because it's just, why not? It's just more or less the same thing really with this on it as well. So it's just the way you can answer questions, the way you can filter through searches, and then it's really funny because now when I look for these searches, and you see when you find something searched and you can see the answer in the preview, but then when you click the link, it's this whole massive article and I can't find that answer. And this is just doing it such in a better way. And but again, we saw Google drop 10% after their Bard AI in their presentation showed it got the wrong answer, right? Basically, the market just went, you know what, 100 billion off the value. It's funny. Let me just ask the question: why did Google drop 10% last week? Was it last week? Let's see what ChatGPT has to say. Because Bard AI is a pile of shit. But it was like one possible that expected to continue. There was a technical glitch in their new AI chatbot that gave wrong answers to some queries and caused a loss of confidence among advertisers and investors. There you go. So you don't even have to ask us. Answered by the chat, But do you think Google was a buy? That's the question.
Yeah. It seems like Google have been holding back on this technology. They've been ahead of everyone else in terms of software AI technology for a while now. But the big problem here is putting this type of AI technology into the search really disrupts their business model. Probably read about it on, ChatGPT seems to be taking up, at least one story every day for every publication and all the cool things that it can do. However, like Google, if you look at the unit economics for every search, it said that they make, in terms of revenue, about 1.5 cents per search. However, it costs them about 1 cent for each search, just the whole entire Google operation. So it leaves them with 0.5 cent of profit. However, the actual compute involved in doing a AI-based search would cost, at the moment they're talking about, it's costing around 7 cents, but they're saying that Google could bring that down to about 0.5 cent. If that is the case, then that means their unit economics have been turned on its head, and that hugely profitable beast is potentially not as profitable anymore. And it's a concerning undertone to what Google, have been previously known as, just a cash generating machine. Not to say that Google can't turn that on its head, but the problem is, if we just saw you demonstrate asking a question from the Bing ChatGPT engine, and where do you think you could insert ads into that? Where Google's whole business model is to show ads at the top, right? And then their natural results there. So there's a flow. People know what are the ads and what are the natural search results, right? The organic search results. But how, if you ask it a query, how can it put sponsored results into the answer without tainting the answer? So like Google have that, one box which answer, like, gives a snippet of a particular website that tries to answer your question. But if you are querying it to do some computation, not just present you with a list of websites with that potential information on, like, what are your thoughts? How can Google switch up their business model? How can they
You sort of think
turn around?
it's like, again, how can you do it without tainting it? Because certain queries like the one I just did, just not really something you can sell. But it's the main thing is,
So they're losing
when
money.
they're trying to,
They're losing money on that query. How can you have to be able to monetize it, right? So unless you've got like a sidebar with some ads, like some of these less reputable sites, have just sidebars of ads, whilst you have your, the main content in the middle. But yeah, go Karen.
Yeah, no, but yeah, exactly. No, because I mean, I think it'll work well for someone querying about, like, I want to buy this type of TV, and you can go, well, these TVs could be good for you, and this one's from here and this one's from there, and so there's certain thing, but certain definitely a lot of use cases for certain queries, but like I said, not for all queries. But I mean, if we just look at take the fundamentals out of the equation, and we look at the chart for Google right now. So I mean, we were up here 107. We had rallied from 85 to 107. It was looking good, and then this move over here was because Bad AI said the wrong answer, pretty much. Well, that was the catalyst. Whatever it was, there was more deeper meaning behind it. The whole investor presentation that brought about the announcement of that wasn't that convincing. They were talking a lot more about other products. They did not really put much emphasis on their new AI system, because I think, and afterwards, apparently, again, allegedly, we don't know how true it all is, but there was a lot of internal rife in Google among a lot of their engineers, because they were annoyed that this was put out, but it wasn't ready. It wasn't ready to go put out in the mainstream, but yet they did it anyway. And why did they do it? Because you have ChatGPT making all the headlines, and the new Bing browser that at the Microsoft announcement, which literally came out the day before. And then you saw that whole presentation and how everything can be done. And then I think Google just put something together. They just did it, and it wasn't that convincing at all. And I think that really put off a lot of investors, and that's why you saw this big move down. So from 107, we went to a low of 92. But either way, when that type of move happens, there's opportunity.
Yeah,
so
I did buy some.
Yeah,
I bought some.
You do it, but again, I'm not a long term. All I did is I'm just looking for a bit of, if it goes back towards 100, 105, that'd be good enough. But we'll just see.
Yeah, so if you look at Dave Lee on Twitter, he was giving ChatGPT a run through a couple of scenarios, saying that, look, here's Tesla's quarterly PDF report, and give it a summary of the entire PDF. You can see it's doing a great job, asking it to link the top trending articles on medium.com, and it's giving those. That's great. However, ChatGPT's accuracy on Tesla's financials that it provided were atrocious. Revenues, deliveries, operating expenses, everything practically completely wrong. At this point, can't really trust info from ChatGPT to be reliable. The main reason I bring this up is that with ChatGPT, it's not being critiqued as much as Google's effort. Does that make sense? Like, this engine is getting things wrong. I've seen it give wrong answers as well. And Microsoft isn't getting the same kind of treatment there. I think mainly it is because Microsoft are in this position now to gain market share on the search market from Google. Google have nothing but to lose, right? So
yeah, I mean, I think personally, what it was is that Microsoft has this, it's got it up the sleeves, and it knows none of this is going to be perfect from the beginning. But where was Google's response? And it's because while all of this was happening, there wasn't really much out of Google, so everybody was waiting, because you're seeing. We talked about it last time, the amount of how quickly it gained 1 million users. The uptake of the whole thing, the usage, like you're saying, there's a headline every day about it, and so many headlines left, right, and center about the whole thing. And we were just saying, where's Google? And then Google finally came, and it messed up on the first day. And so this is just what it was. And the thing is, Microsoft, I'm sure, ChatGPT messes up so much, but people have seen all the benefits and everything of it. And so it's more like, look at the future. This is what it could potentially be. Whereas Google's one is like, all right, here's our answer. First action we see of it is a mistake. So it's like they already know it's going to be a similar type of thing, but it's just the way it came across. And that Bard AI, it just doesn't really fill you with it doesn't sound exciting, does it?
Yeah, it doesn't sound like an AI, does it?
What should we call this new? It's like saying, what should we call this new revolutionary technology? What this AI? And it's got, let's call it John. No offense to people called John, but it's just like bog standard. Bard AI. It sounds like
bring back Ask Jeeves, because that was the initial vision for Ask Jeeves. It never kind of reached its potential anyway. But the CEO of Google, he is, asking the Google employees to take 2 to 4 hours to pressure test Bard and really push the system as much as they can to bug fix as quick as possible. So, I've got faith in Google. They are going to turn this around. Remember, we're in these early days of AI kind of being mainstream. And I think there's going to be this hype cycle like there was with NFTs and crypto and, even the .com boom, where just having .com at the end of your company name would mean that you get millions to hundreds of millions in terms of valuation. So it's going to be the same. Yeah, and just seeing the ideals of Elon Musk was to try to make OpenAI a non-profit, and that meant that whatever it creates can be democratized all over the world. But it seems like a non-profit has profited from Microsoft's investment, and now I just wonder because and in the All In podcast they said something really interesting. Why would, at the infancy of an amazing technology like ChatGPT, why would you sell out 49% of your company at the infancy when this could grow into potentially $1 trillion company, right? Why would you sell out so early? And I think Sam Altman knows that this technology can be easily replicated now with the technology that they have. It's just about the data sets that it trains on, and on top of that data set to have these kind of algorithms that stop you from making the AI say or do harmful things or things that are unproductive to society.
We've gone through these phases over the last few years where literally, you're saying .com, the market went up like crazy. Then there was anything marijuana based, like we're getting into some type of marijuana, and then the stock went up 20%, 30%, 50%. Then there was the EV phase, anything to do with, then it was blockchain. Just say a company just has nothing to do with blockchain, and they'll just go, right, we are going to research blockchain technology, and the stock went up 30%. And then there was EV, like we are now thinking about getting in the EV game, and they sell Coke cans. But that's what it is. And now and I was always wondering what will be the next one. And obviously it's ChatGPT, of course. Every company to launch ClassBot powered by ChatGPT, announced cooperation with Baidu's ErnieBot. Integrate ChatGPT into SendCloud to optimize email services. So every company, this is just literally in this month, the amount of headlines that have come down with companies just saying, we are exploring the use of, ChatGPT. Helpbiz, one of the biggest PR things, is incorporating ChatGPT, OpenAI technology, incorporating into what it just. It's and the stocks are all moving. I think it's died down a bit, but we were getting 20%, 50% moves on the back of these just stupid headlines. So look at this one. So this one was Holo. Which one is this? Microcloud hologram creates holo digital human ChatGPT to build a new virtual interaction models. The thing is, they're not doing any of them. Yeah. They just do the headline, get the stock pop, and then that's exactly what it is.
But then before it used to be, they used to write AI in there. But now, if you see they're all saying ChatGPT. Why are they saying ChatGPT? Because ChatGPT is in the mind share of the people. They could still say it's, we're integrating AI into our product, but no, they have to say ChatGPT. So you have to really look out for these companies that saying that they're looking to do this. Until they come out with a compelling product, it doesn't make a difference, right? These things will just be pumped and dumped. So just be careful with all that stuff.
Looking ahead for me personally, I think I mentioned it last time. I think we're going to just go sideways, and we're starting to see that going on right now. We're going to get some data that's half decent, not that. We're going to see inflation come down, pro-inflation readings, and vice versa. So I think we're just going to keep on chopping back and forth. I think there's a lot of these gains that we've made in January has been a godsend, and now we've got to this level where we're just going to have just general chop back and forth. So looking ahead now, again, I'm just looking to any pop in some of these stocks. I'm just trying to trim, and then if we have a big move down like we did in Google, add a bit more on, and just keep on playing the range, because I think that's what's going to happen this whole year. Trading opportunities back on the portfolio has been pretty slim right now with volatility so low, but we're having volatility uptick quite a bit in the past couple of days on the back of these CPI and the PPI numbers. So hopefully that will bring some trading opportunities coming ahead in terms of options anyway. But
what do you think in terms of tail end of last year? People saying crypto is dead. All these retail investors, they got their ass absolutely handed to them, and we thought, okay, these guys aren't coming back. The Robinhood traders as well in growth stocks and other unprofitable tech stocks got completely reamed, completely out of the market, it seemed. And then all of a sudden, a renewed interest. We see pop in all of these cryptos and complete.
Yeah, I mean, to be honest, I think it's all categorized into one now. Like there's these basket, these algos, these something that they all just go up at the same time. Like you see Bitcoin, the amount it's moved up, it's gone up in the same vein as the growth stocks and the Nasdaq. Like Bitcoin is highly correlated to the Nasdaq, and then we've seen Nasdaq outperforming the S&P and the Dow, and then just it happens to be that Bitcoin is doing the same thing. Ethereum as well. You've seen these altcoins, and they're all being lumped in my opinion, into the same basket as a lot of these growth stocks and some of the moves we've had in them. And you sort of feel like there's this big algorithm that just takes everything up and down at the sort of same time. And so if we start getting a sell-off in the Nasdaq, Bitcoin's going to go back towards the 20,000 mark. And it's just the way it's totally into the basket of all these algorithms that are being which are being done right now. And then obviously the altcoin market is highly correlated to Bitcoin and Ethereum, so whatever Bitcoin does, that follows in. So it's all just connected. So I'm not surprised we're having this move, but again, it just shows you whenever you think something is dead, all you need is a bit of rally, and then
it just brings everyone back onto the table. But do you think that the big money that starts generally that whole move that you're talking about there, are they out there to get the FOMO installed into a whole bunch of retail investors? Those guys invest at the high, and then bam, we've seen this cycle go on and on and on.
That's the whole game. It's because we've seen it, like you're saying, with Charlie Munger, right? Yeah. And it's all of these guys that when they when you see them on these forums, stock twits, Twitter, wherever you may be reading it, Reddit, all these guys that are like, this has got, you might have had a double in the stock, and they'll go, I ain't selling a share. This is going to the moon. Not actually, I bought more. I've increased, and it's the whole thing. But really, those people are selling while they're pumping everyone else to do more. And the thing is that it's a whole massive game to do that really plays with your psyche when you see something move up so much, and if you're not a part of it, you're like, damn, I just need to get in. And the thing is that the thing is, this is why, in a way, I always say is that, like, when the market's falling the way it was and you've got some of these depressed levels, this is the time, if you think it was a good company, is the time to get in, obviously, because when it moves up so fast. Before you know it, you're buying at 50% higher. But again, you don't know when the low is. Like, you could look at Tesla, you could have bought it at 175, 160, 150, and it went down to 100. But then at the same time, I use that same philosophy on the way up. When you have these crazy moves on the way up, you don't know when it's just going to stop, and then all of a sudden they're going to absolutely smash it. And then so let's just say you might be looking at a 30%, 40% gain, and before you know it, you're flat again. So I use the same tactic on the way up as it's going up, just trim bits off. And you might be a bit early, but we've clearly seen, again, you have to be dynamic, you've got to be fluid. And then if it does clearly look like we're going into the next bull market, then your strategy's got to change. But I can't see the fundamentals backing up another major bull market at this moment, judging by where the Fed stands, the other central banks, just interest rates and whole. To have a bull market, you need growth. A lot of these companies are not growing. The stock is just, the earnings are just not as bad as feared. That's basically all it is. Big buybacks, and they're just doing all these things, big cuts. You look at everywhere, all these tech companies are cutting jobs, right? And that's just what it is. Trying to cut the bottom line expenses, and that's the main thing.
100%. Yeah. I guess you have to always just look at the narrative. Before it was like inflation, then it's jobs, and now it's all about the earnings recession. So that's what's got everyone spooked. So like it's all about spotting these narratives and seeing like which ones are going to really have a detrimental risk to your portfolio, and then hedge accordingly. But yeah, we'll see how long this rally can last. like you said, Rajan, it might just tail off, and then we kind of just chop and go sideways for the rest of the year. But who knows? We'll just keep you updated on our analysis and how we see things going forward.
I mean, the main thing I see is the key for everything is to be fluid. I mean, you might have an opinion, you might think something, you might think not, but if you can see things are changing, you can't, you don't be too stuck to your opinion so much that you're not seeing what's in front of you, and that's the main thing. So when you can see the times of changing, or you can clearly see, for example, if we start seeing inflation start ticking up, we're going to be in trouble. So put your defensive strategies, change all of that, and then you just got to see, because right now we're at a period where there's not a set course. It's all data dependent, like I said this morning. So everything's data dependent. So you look at the data, and the data will tell you and guide you about what you've got to do going forward. But yeah.
Cool. All right. So that's been another one from us. Please like and subscribe, and we'll see you guys in the next one.